Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news the American federal budget deficit got sharply worse in August. But first, consumer CPI inflation in the US slipped slightly and came in a little lower than expected at 2.7% for August. It was 2.9% in July. It has been held up by petrol and rents and held back by food. Interestingly, medical care services are rising slower than the average at 1.9%. By comparison, New Zealand hospital services component in our CPI series, the bit patients pay for, rose 2.2% in the year to June. That slip in inflation allowed American real earnings to rise in August, but the gain is only 0.2% over the whole year. Yes, wages are going up, but inflation is keeping pace. And the American federal budget deficit got much worse in August, even more so than the expected deterioration. It came in at a deficit of $214 billion for the month, taking the 11-month total to date to just on $900 billion, a level will probably end up for their full fiscal year to September, and racing closer to the GFC deficit levels, which reached $1.4 trillion in 2009. The 2018 deficit will be 4.5% of GDP. The Americans certainly aren't repairing the roof while the weather is fine, and at this new level, they're about $100 billion worse than the CBO estimated in June. No one could say that this deficit track is responsible management of public finances. The ECB rate decision brought no changes and no surprises. This is their last month of 30 billion euros of bond buying. From October, it steps down to 15 billion euros per month, as previously announced. One thing the ECB did do, however, is it lowered its growth forecasts on trade war fears. There were no changes and no surprises at the Bank of England rate review either. And overnight, Turkey also reviewed its rates in the middle of its currency crisis and decided to raise them by a massive 6.25% to 24%. Their strongman president is not happy, but markets are, as the Turkish lira immediately rose in value. Today, the US Treasury 10-year yield is marginally low at 2.97%, and their 210 curve is tighter at just 20 basis points. The Aussie government 10-year is at 2.60%, that's up 1 basis point. The Chinese government 10-year is at 3.68%, that's down 2 basis points, while the New Zealand government 10-year is down to 2.57, that's 5 basis points lower. And gold is lower today, down $7 at $1,201 an ounce in New York. And US oil prices are down as well, down as sharp as they rose yesterday. They're down about $1.50 a barrel and now just over $68.50 a barrel. The Brent benchmark is also lower and now just under $78.50 a barrel. The weakening of the US storm and its shifting of its track might have something to do with the pullback in prices. The Kiwi dollar is starting today marginally firmer at 65.7 US cents. On the cross rates, we're at 91.3 Aussie cents and 56.2 Euro cents. That puts the TWI at 69.3. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.